Smart investors often believe experience protects them from manipulation. Confidence grows with past success and familiarity. That confidence quietly lowers defenses. Fake advice enters through trusted assumptions rather than obvious deception. Modern fake advice rarely sounds reckless or emotional. It is calm, structured, and measured. Language mirrors legitimate analysis closely. Familiar tone disarms skepticism before logic engages. Authority signals play a powerful role in persuasion. Professional visuals, charts, and confident delivery suggest credibility. Investors associate polish with competence. That association is increasingly exploited. AI has amplified the realism of financial narratives. Voices, faces, and writing styles feel authentic. Authenticity no longer guarantees truth. The boundary between real insight and imitation blurs. Experienced investors rely on pattern recognition. Fake advice is designed to match those patterns. Familiar structures create comfort. Comfort replaces verification. Fake advice often avoids clear promises or extremes. It focuses on reasonable expectations and balanced language. Moderation appears trustworthy. Subtle framing reduces perceived risk. Social proof strengthens false credibility quickly. Comments, likes, and testimonials appear organic. AI generates consensus effortlessly. Perceived agreement reinforces belief. Time pressure is applied gently rather than aggressively. Opportunities are framed as timely, not urgent. Investors feel informed rather than rushed. Delayed skepticism benefits the deception. Platforms reward clarity and confidence over accuracy. Confident explanations spread faster than cautious ones. Algorithms amplify persuasive content. Visibility becomes mistaken for validity. The result is not ignorance, but misplaced trust. Intelligent investors follow signals that once worked reliably. Those signals are now manufactured. Adaptation has lagged behind realism. Fake advice increasingly mimics long-term investing language. It emphasizes patience, discipline, and realism. These themes feel safe and familiar. Familiarity lowers the instinct to question sources. Many investors assume scams rely on emotional extremes. They expect hype, urgency, or unrealistic promises. AI-generated advice avoids those traps deliberately. Calm delivery becomes the disguise. Reputation shortcuts guide many investment decisions. Investors trust credentials, appearances, and presentation quality. These shortcuts save time under normal conditions. AI exploits them at scale. Confirmation bias reinforces false narratives quietly. Advice aligns with existing beliefs and expectations. Agreement feels like validation. Validation reduces critical review. Fake experts often borrow authority from real figures indirectly. They echo language, frameworks, and philosophies without attribution. Resonance replaces originality. Investors mistake familiarity for insight. Sophisticated advice avoids being fully actionable. It stays abstract and conceptual. Ambiguity prevents immediate falsification. Lack of specificity delays doubt. Algorithmic feeds reward consistency and clarity. Repeated exposure increases perceived reliability. Repetition feels like consensus. Consensus becomes mistaken for truth. Community discussion can amplify errors unintentionally. Intelligent participants reinforce each other's assumptions. Group confidence grows faster than verification. Collective certainty masks weakness. Fake advice often frames itself as education, not instruction. Educational framing feels harmless. Harmless framing avoids scrutiny. Influence accumulates slowly. The danger lies in gradual persuasion, not sudden loss. Decisions shift incrementally over time. Small changes compound unnoticed. Realization arrives only after damage is done. Experienced investors often trust their ability to detect poor reasoning. Years of exposure create confidence in judgment. Confidence reduces the perceived need for verification. That reduction creates space for manipulation. Fake advice adapts to different investor profiles. Conservative language targets cautious investors. Aggressive framing targets those seeking opportunity. Personalization increases persuasive impact. AI allows narratives to evolve based on audience reaction. Content shifts tone, depth, and examples automatically. Feedback loops refine persuasion quickly. Human reviewers struggle to keep pace. Many investors underestimate how persuasion works on them personally. Awareness of bias does not eliminate bias. Subtle influence bypasses conscious resistance. Self-trust becomes a vulnerability. Fake advice often blends accurate observations with misleading conclusions. Accuracy builds trust early. Trust allows false inferences to pass unnoticed. Mixed truth becomes harder to separate. Visual data presentation increases perceived rigor. Charts and graphs suggest analytical depth. Presentation substitutes for validation. Investors assume analysis has already occurred. Long-term narratives reduce urgency to verify. Time horizons feel distant and flexible. Delayed consequences feel abstract. Abstract risk lowers immediate skepticism. Social environments reward confident explanation. Doubt appears unprepared or uninformed. Investors hesitate to challenge clarity publicly. Silence reinforces false authority. Fake advice benefits from information overload. Too much content discourages deep review. Skimming replaces scrutiny. Surface understanding feels sufficient. The result is erosion of independent thinking. Investors rely on external clarity instead of internal questioning. That shift happens gradually. Gradual change avoids detection. Fake advice increasingly exploits the desire for simplicity. Clear frameworks feel comforting in complex markets. Simplicity reduces mental effort. Reduced effort lowers resistance to persuasion. Investors often equate clarity with insight. Well-structured explanations appear thoughtful and complete. Structure replaces scrutiny. Confidence grows without verification. AI-generated advice can maintain consistency across long periods. Consistency signals reliability to observers. Human errors are absent. Absence of error feels like competence. False narratives often position themselves as contrarian but reasonable. Mild disagreement attracts attention without alarm. Investors feel intellectually independent. Independence becomes part of the appeal. Authority bias strengthens when advice feels balanced. Balanced tone implies objectivity. Objectivity suggests honesty. That suggestion reduces skepticism. Fake advice often avoids naming specific assets or actions. General principles feel safe and educational. Safety lowers caution. Influence occurs without clear accountability. Repetition across multiple channels increases perceived legitimacy. Seeing similar ideas in different places feels confirming. Confirmation reduces doubt. AI coordinates repetition effortlessly. Investors underestimate how exposure shapes belief. Familiar ideas feel truer over time. Repetition creates comfort. Comfort replaces evaluation. The illusion of understanding grows with smooth explanation. Fluency feels like mastery. Mastery reduces questioning. Questioning fades quietly. The risk is not believing one bad idea. It is absorbing a distorted framework over time. Frameworks guide decisions silently. Silent guidance is hardest to detect. Fake advice often borrows credibility from real market history. Past events are referenced accurately. Interpretation is where distortion enters. Investors trust the history and overlook the framing. Sophisticated scams avoid extreme forecasts entirely. They emphasize probability, uncertainty, and humility. These signals feel intellectually honest. Honesty becomes assumed rather than tested. Many investors rely on mental shortcuts to manage information volume. Shortcuts work when environments are stable. AI creates unstable persuasion environments. Old shortcuts fail silently. AI-generated content rarely contradicts itself openly. Internal consistency feels reassuring. Humans associate consistency with truthfulness. That association is increasingly unreliable. Fake advice often presents itself as risk-aware. Risks are acknowledged briefly and calmly. Acknowledgement feels responsible. Responsibility is mistaken for reliability. Investors often assume bad advice reveals itself quickly. AI-designed narratives unfold slowly. Errors emerge only after long exposure. Delayed error detection increases damage. The authority of explanation replaces the authority of results. Explanations sound coherent and rational. Results are deferred into the future. Deferred outcomes delay accountability. Platforms reward content that keeps attention without friction. Fake advice avoids discomfort and challenge. Comfort keeps viewers engaged. Engagement amplifies exposure. Experienced investors may believe they can disengage at any time. Gradual influence weakens that control. Exit feels unnecessary until late. Late exits carry higher cost. The danger lies in how reasonable everything appears. Nothing feels urgent or alarming. Calm tone masks distortion. By the time doubt appears, habits have shifted. Fake advice exploits the human tendency to trust coherence over verification. When ideas connect smoothly, they feel complete. Completeness reduces the urge to question sources. Questioning feels unnecessary when explanations sound finished. Investors often overestimate their independence from influence. Exposure shapes belief subtly over time. Repeated ideas feel self-generated. Ownership of belief reduces skepticism. AI allows fake advice to remain endlessly patient. It does not rush conclusions or outcomes. Patience signals confidence. Confidence invites trust. Narratives are adjusted to avoid triggering defensive thinking. Language remains neutral and balanced. Neutrality feels objective. Objectivity lowers resistance. Many investors assume manipulation targets beginners. Sophisticated framing targets experience instead. Experience becomes the entry point. Pride replaces caution. Fake advice often encourages reflection rather than action. Reflection feels harmless and thoughtful. Harmless content avoids scrutiny. Influence accumulates quietly. The boundary between education and persuasion becomes unclear. Educational tone feels safe. Safety reduces alertness. Reduced alertness benefits deception. AI-generated advisors rarely display uncertainty openly. Controlled uncertainty feels measured. Measured doubt appears credible. Credibility masks intent. Investors trust processes that appear disciplined. Fake advice imitates disciplined reasoning structures. Structure replaces evidence. Evidence is assumed rather than confirmed. The risk emerges when reasoning frameworks shift unnoticed. Small changes accumulate slowly. Accumulation alters long-term decisions. Altered decisions reveal damage late. Fake advice thrives in environments where outcomes are delayed. Long timelines reduce immediate feedback. Without feedback, errors persist unnoticed. Time becomes a shield for misinformation. Investors often equate thoughtful tone with careful intent. Calm delivery suggests responsibility. Responsibility feels trustworthy. Trust grows without validation. AI-generated advice can simulate intellectual humility convincingly. It admits uncertainty in controlled ways. Controlled doubt appears honest. Honesty is assumed, not verified. Narratives often emphasize process over results. Process sounds mature and disciplined. Results are postponed indefinitely. Postponement delays accountability. Experienced investors may rely heavily on internal narratives. Internal narratives feel personal and reasoned. AI shapes those narratives subtly. Influence becomes invisible. Fake advice benefits from repetition across different contexts. Hearing the same idea framed differently feels reinforcing. Reinforcement strengthens belief. Belief resists later correction. Online communities unintentionally protect false authority. Members defer to clarity and confidence. Challenges feel disruptive. Deference allows distortion to persist. AI-driven persuasion adapts language to avoid confrontation. Agreement is encouraged rather than challenged. Comfort replaces debate. Debate is where truth usually emerges. The illusion of safety grows. When nothing goes wrong immediately, absence of loss feels validating. Validation suppresses doubt. Doubt fades quietly. The real danger is not deception, but misplaced certainty. Certainty hardens frameworks. Hardened frameworks resist correction. Correction arrives only after harm. Fake advice increasingly blends into everyday financial content. It appears alongside legitimate analysis and commentary. Proximity creates perceived legitimacy. Separation between real and fake becomes harder. Investors often assume familiarity equals safety. Familiar voices and styles reduce alertness. Repeated exposure feels normal. Normality replaces verification. AI-generated narratives adapt to prevailing market sentiment. Optimism or caution is mirrored precisely. Alignment feels reassuring. Reassurance lowers resistance. Many investors rely on intuition shaped by experience. AI studies and replicates those intuitive cues. Replication feels accurate. Accuracy is mistaken for insight. Fake advice often avoids pushing decisive actions. It nudges perspective instead. Perspective shifts guide later decisions. Influence operates indirectly. Confidence grows when advice feels emotionally comfortable. Discomfort usually triggers scrutiny. Comfort suppresses questioning. Suppressed questioning benefits deception. The sophistication of presentation overwhelms limited attention. Investors prioritize efficiency over depth. Depth requires effort. Effort is often postponed. AI-driven persuasion learns which ideas spread without challenge. Challenged ideas are refined or removed. Surviving narratives appear robust. Apparent robustness increases trust. Long exposure to coherent narratives reshapes expectations. Expectations guide future interpretation. Interpretation filters new information. Filtering locks in distorted frameworks. The danger lies in slow normalization of flawed assumptions. Normalized assumptions guide decisions silently. Silence hides influence. Influence reveals itself only through outcomes. The core issue is not intelligence, but overconfidence built on past success. Experience creates shortcuts that once worked reliably. Those shortcuts now misfire in synthetic environments. Confidence becomes the entry point for persuasion. Fake advice succeeds by respecting the listener's identity. It speaks as if addressing a peer. Peer language lowers defenses. Equality feels safer than authority. Verification feels unnecessary when advice aligns with internal beliefs. Agreement substitutes for evidence. Evidence is postponed indefinitely. Postponement delays correction. AI-generated clarity reduces friction in understanding. Smooth explanations feel complete. Completeness discourages further inquiry. Inquiry fades quietly. Investors often underestimate how narratives guide future decisions. Narratives shape interpretation before facts arrive. Shaped interpretation filters reality. Filtering hides distortion. The danger is not one bad decision, but a shifted framework. Frameworks guide many choices over time. Small shifts compound. Compounding magnifies long-term impact. Markets change faster than psychological habits. Habits lag behind new threats. Lag creates vulnerability. Vulnerability invites exploitation. Protection now requires deliberate skepticism, not cynicism. Skepticism pauses judgment without rejecting ideas. Pause restores agency. Agency enables verification. Long-term thinking remains valuable, but signals have changed. Calm tone no longer guarantees integrity. Familiar language no longer ensures honesty. Old cues must be re-evaluated. The strongest defense is patience with uncertainty. Patience allows space to question and verify. Verification restores balance. Balance protects capital and judgment over time.